Well, good morning, everybody, and welcome to the Saturday Morning Multifamily Unplugged. Hey, this is the #1 Saturday morning radio show, the real estate investor and for real estate professionals and property managers, where we dive into raw, unscripted conversation about multifamily real estate and about property management and current events. And one of the things we like to do is we just kind of pick up a current event, see what's going on in the marketplace, see what's on the news. Really a couple of topics that we like to get into depth, get into deep, and not have any fluff or conversation, but real factual data. Well, I'm Mike Morawski, and I'm joined by my co-host this morning, Carl Moose. Hey, Carl, you want to say hi quick?
Yep. Hello to everybody, all of you that have listened to us before. Welcome back for new people. Glad to see you're here.
Thanks, Carl. And we're spontaneous and real. It's raw and unscripted, and so we're going to make some mistakes along the way, and we're going to have a little bit of fun. We have a guest on this morning, Jorge Abreu. George, you want to say hi real quick?
Morning, everyone, and thank you for taking the jacket off, Carl. You feel pretty bad there.
Oh, good. See, Carl, and you thought I was going to be the only one. So. All right, well, let's get engaged in some conversation here. That's what this is about. And every week, my co-host Moose and I, we, take our 50 years of experience and knowledge in the multifamily arena, and we bring it to you to help educate you and help you along a little bit more. So let's make sure you grab your coffee or your mimosa and sit back and enjoy this ride. Hey, today's show is sponsored by the Multifamily Global Summit, where on October 15th through the 17th, you can join us for 3 days of networking, education, and fun, where we're going to be joined this year by the top 20 multifamily real estate investment specialists from around the country, where they're going to talk about their tips and their tricks on how to grow your multifamily real estate portfolio, your property management business, and how to get better at what you're doing. Matter of fact, our guest today is one of the speakers at the event. We thought this would be great as we start walking towards that. So go register for the event. Go to our page, like it, share it with somebody else. Make sure you guys talk about it. That's one thing that I people have been telling me that I forget to do is talk about you going and liking this and sharing this. So please make sure that you go out there and do that. Well, let me introduce our guest, Jorge Abreu. He is been investing in real estate for over 14 years. He started in the single family real estate space, and now he's in multifamily properties. He's wholesaled over 200 properties, fixed and flipped 100 properties, and developed several new construction projects. Over $8 million in ground up projects. For the past 3 years, George's sole focus has been on large multifamily properties. He invests both actively and passively, a full-time multifamily investor. He's involved in about 4,000 units that he's going to talk to us about today. George is the CEO of Elevate Commercial Investment Group. Also, he owns JNT Construction. They focus on helping multifamily investors with their full renovations. He's based out of Dallas, Texas, where he currently lives with his beautiful wife and 3 young girls. And he says that that's the reason and the people in his life that keep the fire burning for him every day. Hey, George, welcome. Sounds, I love your bio, and always love introducing somebody who's smarter than me or Carl. So that's nice to know.
George, or both of us combined.
Yeah, right. Even all those years. Hey, George, why don't you do this? Can you just kind of, couple minutes talk to our listeners about who you are and how you wound up getting in this business, and, highlights and what you like and.
Yeah, I can do that. So, I was going down the path of, I was getting my engineering degree, going to university, and at some point I realized I didn't want to do that. I didn't want to be an engineer. I didn't want to work for someone else, and I wanted to build a company, and wasn't sure what exactly yet, but started doing some research and looking at some successful individuals, and real estate investing kept coming up as either the tool that made them their wealth or they used it to multiply their wealth. So I started going down that path and started with family, like you said, and enough to. Am I freezing up on you guys, or are we good?
Yeah, you know, your band, we got a bandwidth issue, I think, a little bit, kind of cutting in and out.
Yeah, sorry about that.
You're back.
You're back now, though. Go ahead.
So yeah, I mean, I started doing enough deals in the single family where I, at that time, had a W-2, quit the W-2 and went all in on real estate. Picked up some holds and some smaller single family along the way, and then decided to open a construction company along the way as well to help scale the fix and flips that we were doing. And it was about 4 years ago that I kind of looked back at everything, and I felt like what I was doing was very, very transactional. It was from one deal to the next. I wasn't really building that long-term wealth. And that's when I decided to focus on multifamily and syndications. Didn't really know that existed till then. And started to really focus on just that. Stopped doing single family altogether. And on my 7th syndication now, and also invested passively quite a bit once I realized the benefits to that, as far as tax benefits and obviously the returns. But yeah, that's how I ended up here.
Good. So why don't you explain, because some of our listeners are probably might be newer. Why don't you explain the difference between passive and active investing?
Yeah, active, you know, it's more of sweat equity, right? You're the one finding the deal. You're the one securing the financing, raising the equity, making sure the deal closes. Then once it closes, you're the one managing the asset, making sure it performs. That you execute your business plan. You're just bringing the equity, right? You're bringing your funds to the table, and that's pretty much it. You know, at that point, you should do your due diligence on the team and the deal. But once that's done, you know, now you step back and you let the deal team handle it from there. So it's truly passive.
Yeah, you broke up there for a moment, but I think right when you were talking about the difference between active and passive. So yeah, you know, I mean, it sounds pretty simple and common sense. You know, if you're active in the property or you're active in the management or the business, then you're considered an active investor. If you're just an investor, you know, and you're getting a K1, if it's a LLC or whatever, then it's truly as passive. But you know, a lot of people don't. I'm glad you mentioned that, Mike, because you know, a lot of, you know, until you actually go down that road, you don't, you know, you don't always have that distinction. So I appreciate that.
Hey, let me just mention real quick too, if anybody out there has any questions for George or Carl or I, you know, the chat box is open. Drop something in the chat there, and you know, if you just even want to say hi, whatever. So, so George, what was a defining moment for you? You know, obviously you were in the single family doing fix and flips. Carl and I, our background is the same thing, and then went into multifamily. What was the defining moment for you that you finally just said, hey, you know, I've had enough of residential or single family residential, and time to go on the multifamily side?
No, I think it was, my family was growing, right? You know, like you mentioned in my intro, I've got 3 little girls, and I just had no time. You know, my time management was horrible. I couldn't separate myself from the business. And I wanted to be there for my family. I wanted to make sure I didn't miss any important times in their lives, and I just wasn't happy on that end. I think that's where I kind of told myself, okay, something's got to change.
Yeah.
You remember the first building you bought? The first, not the first house, but the first multifamily. And there's a reason I asked. You know, a lot of the folks that are on this call, you know, they have a similar projection, right? Or you know what I mean? You start off, you say, gosh, I want to buy a house. You buy a house. You might take a course, fix and flip. You know, then before you know it, you know, you've done 4 or 5 of those, and you're kind of in the rat race, right? You're on the treadmill. And, you know, it sounds like you went through that. I know I went through that, you know, and then I said, forget it. I'm going to get into the multifamily because it was more of a business, right? It was more of something that you could really, you know, put some systems and some practices and some standards in place. So I'm just curious, you know, do you remember when you made that transition? You know, what was the first building you bought? I'm just interested in hearing that story.
Yeah, it was smallest one we've bought so far. It was a 37 unit. And yeah, I mean, it was a big deal. You know, that was the first step to the new path I wanted to go down. And it was a great feeling getting there.
Yeah, that was about twice the size. The first one I bought was 18 units. So that's still a pretty good sized building. You know, I mean, I tell people, I know Mike leads people down this path as well. You know, I always tell people, I made a lot of mistakes on that building, right? And if I did 1 mistake per door per year, that was 18 mistakes, right? So if you're looking at getting into this from never owning property before or transitioning from single family homes or fix and flips, I always recommend that someone buys, you know, what I call a 2 to 4 to 6 flat, you know, smaller property. You know, it's a little bit different than managing a house. You're going to make mistakes. However, they're not going to be as many, you know, it's not going to be multiplied over a lot of different units. So 36 units, that's a pretty good sized building.
Well, I take that back then. So I did a 4-plex years before that. That 37 was my first syndication.
Oh, gotcha. Okay.
Yeah. And a lot of mistakes on that first 4-plex for sure.
Yeah, you know, that's how we learn, though, is we learn by those mistakes, right? And anybody who says, oh, I don't want to make any mistakes or I can't goof up, you know, I think they're wrong, because I think the best way to learn, and the only way that we really learn, is by making some mistakes. You know, even just little stubbing your toe, right? It teaches you to walk a little bit different way. Hey, one comment I want to make. You mentioned something that I just find very important in any real estate professional's life, any real estate investor's life, is time management. You know, you talked about, hey, I want to spend more time with my family. My family was growing, and I wanted to do something that I had more control of my time. You know, we get so stressed out and so overworked in this business that if we're not cautious about it, you know, we can let it overtake us. And I've been there, I've done that, right? So the one thing in my coaching business, what I teach my clients is time management and how important it is to have a better quality of life. You know, the deal doesn't matter. You know, I'd rather walk away from a deal than if it's going to take way too much time and take me away from my life, you know, because the quality of life is more important today. And I think that's what's important, or should be, you know, important in our lives about that. So
does your family have a background in real estate, or is there anybody else, your brothers, or do you have any other relatives that, you know, how did you get the real estate bug, I guess is the question. I know you said you didn't want to go down the engineering, but you could have done other things. You could have bought a Jimmy John's, or you could have started a trucking company. But when did you get the real estate bug?
Yeah, I mean, I definitely have family members that are either in some type of industry that has to do with real estate, or that have owned, you know, I had an uncle that owned smaller multifamily. At that time, I didn't really, you know, there were times where I went with him and I visited the properties, but I didn't really think it was making an effect in what I was going to do later on. But I guess it kind of did. And then I guess one part I skipped, you know, I did end up getting my my realtor's license, and I also got my mortgage broker's license, which in my family I do have quite a bit of that. But I got those always with the thought that I was going to be investing. It was just something I wanted to have there.
Right. Well, Mike's got an interesting story. He was, what were you, like 7 years old when you were sitting by the pool?
I was 8. Yeah, I tell this story, right? I was 8 years old sitting by the pool. We're on family vacation, and I'm sitting with my dad at this resort. And I remember asking my dad about all the doors in the rooms, and we have no family background in real estate. Nobody in my family history was in real estate at all. And my dad's trying to explain to me how people come there, they stay there, and they pay the owner money. I said, geez, I want to be the owner, right? So I caught on early on. So it's been with me, and there's a number of things throughout the years. Here's another, let me ask you this. I want to just ask this question this morning. George, what was the first business you were ever in or owned? You know, as an entrepreneur, what was the first business you ever did for yourself?
It was the single family fixing flips. Yeah.
All right. You know, a lot of guys say it was a lemonade stand when they were 7 or 8 years old.
Yeah, and for me, you know, my dad was a professor. You know, my mom and dad are 90 years old. They still live in the same house that they bought when they moved to Cleveland. And he bought it on a lease option way back in the 60s, you know what I mean? And just the lady that owned it, my dad was smart enough to know that the rent was just, paying her mortgage. So he invented buying it. And then he bought one across the street, and then he bought one around the corner, and he ended up with a small little portfolio. And my brother and I, I have 4 sisters, and my brother and I, when my mom and my sisters went shopping, my brother and I got in the car with my dad and went and cleaned gutters and painted rooms, and we thought we were being, child labor, child slave labor, you know what I mean? But it ended up, we learned great lessons, and just learned how to fix a doorknob and how to change a fuse and, all those little things, which I didn't really want to do when I owned property. However, this is the key thing. When someone would quote me, to change out an electrical box, or quote me to hang a new door, or quote me to paint a room, I would know whether they were, ripping me off or not, because I knew how long it took to do it, and I knew how much the material was. So, those little, what you call, Mike, those clues, right? Success leaves clues. Those little clues that I was picking up along the way when I didn't even know it, were very valuable down the road. So, and I'm sure, George, you have examples and stories of that as well. Mistakes that you made, or things that you watch other people do and said, I'm going to do that, or I'm not going to do that.
You know what? I honestly have not even looked back and thought about it enough. But I mean, as you mentioned that, I did, my uncle was a contractor, and he would take me and my cousin, I don't want to say every weekend, but quite a bit. He would take us with him, and we would help him on some of his projects. And I didn't think anything of it at that time, and I actually enjoyed it. But yeah, I'm sure I learned some lessons from it.
What's funny, right, is that's one thing you can't teach somebody. You have to learn that on your own by time, right? That's a trial and error thing. I need to have a bathroom put in, and I have 3 contractors come over, and I get pricing, and then somebody does the job, and I watch it, and I look at it, and I ask them, that's something that over time you get a handle on. I was doing a meetup call the other night, and somebody said, well, how do I know? I said, well, it's hard to explain somebody, right? It's hard to teach somebody that, but it just happens over time. So, and you kind of get a feel for it. So, and I know you're in the construction business. Talk about that a little bit.
No, I mean, what you said is, sorry, I've got this fly that's driving me nuts. Yeah, like you said, I mean, a lot of it comes with the experience of it, when I first started with the construction company, we obviously had to bring on crews and subcontractors, and a lot of this stuff is like, okay, well, how do you know if they're giving us a good price or not? And I did a lot of it in the beginning on my own to kind of just get a feel for it. And I was framing walls. I was mudding the drywall. I wanted to really know what it takes and how much time it takes to do these things.
Yeah. Well, I totally agree with that there's valuable lessons, even though you may not want to do it long term, but just getting your hands dirty and, like you said, Mike, keeping an eye. And, I'm a big mindset guy. That's my thing is mindset. And I always tell people, follow your intuition. If something doesn't feel right, or you get that weird feeling in your stomach, a lot of times your intuition is right on, so even if you don't have a ton of experience, but there's something that just doesn't feel right, pay attention to that, you know what I mean? And I know I have examples of that. I remember a couple times I walked into a building and I literally didn't get 5 feet within the front door, and I said, no, this isn't it. And it was just my intuition just saying, there's something about this building, or sitting at a closing and the deal, somebody trying to retrade the deal, and I just said, you know what, this isn't what we agreed to. It's my intuition just said it's not working, you know what I mean? So always follow your intuition, because it usually is right on, even if you don't know logically, or you don't know cognitively, you can, that your intuition is a very good barometer of what's happening. So I don't know, that's just my 2 cents on that.
Anyhow, we got a question here, so let me read this. Hey, good morning, Paul. How are you? So Paul asks, so I am not very handy, but I'm more and more interested in trade skills and just home building in general. Should you compensate for that by partnering with someone who has that experience? What a great question. You want to answer that, George?
Yeah, look, I'm multifamily. I'm all about partnerships. I think it's definitely a team game. Unless you've built a really strong team internally, that's obviously a different story. But I see no reason why you can't partner with somebody that has a skill set that you don't, and you guys got good synergy and you leverage each other's skills. Could make for a good partnership.
Yeah, I agree. Even in the single family sector, I have a good friend up in Madison that when he first got in the fix and flip business, what he did was he partnered with a contractor, partnered with a general contractor, and he put all the money up and found the deals and did all the heavy lifting, and the contractor did all the heavy lifting on the renovation side, and they had a great partnership for a number of years. So yeah, it does make sense to partner with somebody from that standpoint, because now what it does is it gives you some education, especially if it's somebody that you have a relationship with and you can learn from them if they're willing to teach you, right? So
yeah, and then the other question is, do you do that? How formal do you get? Do you fold them into the LLC? Do you make them a partner? Do you have some other type of agreement that says if you do this amount of work or this type of work, on this schedule, and you put some boundaries around it, put some parameters around it, because getting into a partnership can be like getting married. There's good marriages and there's bad marriages, just like there are partnerships. So really, it's a great question, Paul, and you really want to think through it before you jump full steam into bed with somebody. I think there's another question too. Mike?
Say it again?
Yeah. No, I'm sorry. It was just in advance of the question. So, George, tell us what you're going to talk about at the summit. I'm very excited to hear about that.
Mike, what am I talking about? Sorry.
I think more so your journey from single family and that fix and flip arena to syndication, how you made that transition. Because that I don't believe that that's ever an easy transition. We have it in our mind and it's what we want to do and what we want to accomplish, where we want to go, but it's that first step, right? So it's how do you get yourself from the thought process to taking action and actually going and doing it.
Okay, I like that. I haven't really spoken about that before, so that should be exciting. Yeah, it's a lot with mindset. You're going from, let's say, buying $100,000 houses or $200,000 or whatever you're doing. I was even towards the end, I was building $1.4 million houses and flipping those. But even then, I still had to get over the fact that, okay, I'm going to start buying properties that cost 20 million, 40 million. You know, we told a $90 million deal at the end of last year. So a lot with mindset, and then obviously I can go into more detail, but I should probably save it for the summit.
Yeah, I didn't mean to put you on the spot, George. No, but but you bring up a good point. You know, there's transition points, right? I mean, whether you own the condo that you live in now and you're thinking about buying a 2-flat, or you own a bunch of single-family homes and then you want to buy that 10-unit building, or you might own a bunch of 10-unit buildings and now you want to start owning, buying 50-unit buildings. There's those transition points, and I always found it very helpful to pick the brains of other people. Find somebody that's done what you've done and pick the brain with them, right? And pick their brains so that they can, help you not make some of those mistakes that you made. Is there anybody that was a mentor for you? I mean, is there anybody besides some of the folks you mentioned in your family?
Yeah, and I mean, I would like to just add to what you said. I agree with you 100%. I would say just try to find somewhere to add value to that individual. So they're a little more, I don't want to say they're not going to be receptive to you, but if you're adding value to someone, then they're going to feel more compelled to give you more information and open up. But yeah, I mean, I definitely had some mentors. I had some coaches. I did Dave Lindahl's coaching. I'm not sure if you're familiar with him. But,
oh yeah.
Okay. So that group's been around for a long time. They've got investors that have been doing it for a while. So I definitely was picking their brains and doing what I just said, trying to see how I can add value to those individuals and then kind of pick their brains more and learn from them. I think I always say nowadays, I think you can figure things out on your own if you want to, but it's going to take you a lot longer. There's going to be a lot of mistakes along the way. Or you can add value to somebody that's done it already and kind of learn from them, or you can hire a coach.
It's interesting you say that. Bob Proctor's a mentor of mine, and he always used to say, he said, Carl, you can either invest time to save money, or you can invest money to save time. He said, which is more valuable to you, time or money? And I said, well, of course, my time. He said, well, then invest the money to save the time. He said, because you can take 30 years to figure this stuff out. He said, or you can pay somebody, and work with somebody, or add value to them, as you said. There's some value that you add, whether it's you're paying them or providing a service or whatever, and save time. He said, because time's way more important than money. And that just always stuck with me, so.
Yeah. Hey, you mentioned coaching, and I think that coaching is really important in people's lives. It goes back to that time management issue and learning how to do something and being coached through different processes and procedures. I've had a coach for 25 years, and I'll never forget the first time I wrote that check for one-on-one coaching at $1,000 a month and said, oh my gosh, how am I going to do this? But you know what? Coaching is so effective that year after year, I would see a 20% increase in my business as a direct result of it. And when you can equate to the cost to the results, the feature benefit, right? It's so much. Do you still have a coach today?
I don't have a coach that I meet with monthly now. I did till sometime last year, and then I'll be getting another one. That's for sure.
You want to sign up? I'll send. You opened that door. I had to ask.
Yeah, I saw that coming, George. Hey, sorry, buddy.
Hey, listen. Thank you. Hey, George, will you talk a little bit about raising money? How do you do that? What's your process for that? And really talk about it from the first time you did it, from that 37-unit building. Yeah,
I mean, the first time it was just kind of putting all my contacts together, right, and reaching out to them through. Obviously, an email blast is the way to get to them the quickest and easiest, but then also pinpointing which ones I should pick up the phone and call and kind of talk to them. Thinking about the closest relationships I have that would listen to me first. And from there, it's kind of involved. It started turning into now where it's more marketing and getting the word out about the benefits of multifamily investing. And I always tell my team we're providing. It's easy to sell because it's something we believe in what we're providing. In other words, like a lot of individuals don't know the benefits of investing in multifamily. Taxes alone, I mean, they're about to have to pay a massive amount of money in taxes. And right now, as we get close to the end of the year, there's no better time to invest in some multifamily properties. Yeah.
So, you talked about end of year, right? What about where we're at in this pandemic and where the world's at? Where do you foresee things going, as we get, through the end of the year here into the beginning of next year?
I can see the end of this. The part that's got me a little thrown off is the elections. That's the one that's a big question mark for me. I do see this pandemic slowly coming to an end sooner than later. And once that happens, depending on the elections, I feel like it's going to start. I want to say it's weird because it's not like, especially multifamily, it's not like we've seen a hit. So I do think some opportunities are going to pop up. It's not going to be anything like 2007, 2008. But I do think some individuals are going to run into issues. So you'll see those opportunities. I think to actually be able to purchase one of those, you've really got to be in the know, and you've got to have some relationships to have those come to you. And then I see the economy getting back to where it was, and maybe not towards the end of next year or the following, for sure.
Are you shifting gears at all, or are you on a steady path? You're going to stay on the path that you're on?
I mean, I've shifted my everything, pretty much our business. So we were very focused on heavy value add deals, great terms with the bridge loans and all that kind of stuff. So those bridge loans with the great terms are kind of gone. Some of them are coming back, but everybody's kind of looking at those heavy value adds a little different now. So we've kind of gone more into cash flowing day one, still some value add in there, whether it's the rents aren't at market or flaws we see in the management, but more cash flowing from day one.
And as far as your passive stuff, what do you look for as an investor? When you're a passive investor, what do you look for?
First is the team, whoever's the lead on it. I really dig into that, and I want to understand where they're coming from, what their experience is, what their track record is, what they construction. Obviously, I want to know who's managing their capex and what their business plan is. And then once I'm done feeling comfortable with that, then that's when I dig into the area and the deal. And it depends, there's some money that I invest passively that I take a higher risk, and I know I'm taking a higher risk for a higher reward. And then there's some that I'm putting in the safer, more cash flowing type properties.
Right. Okay. So the team, you mentioned the team, that's really important. Obviously. So good. That's great. Thank you.
It all comes down to risk reward, doesn't it? At times. But what's interesting is, you said, well, I just went to everybody I knew in the beginning, and that's that whole family and friends thing, right? So people say, well, where do you find the money? If I find a good deal, listen, here's what I know is there's no shortage of capital out there. If you've got a good real estate deal, the money will show up. All you have to do is ask around and talk to people, and you'd be surprised how fast it comes about, so.
You gotta ask around though, so it doesn't just come.
Well, hey, there's a famous book that's got a famous quote in it, and it says, ask and you shall receive, knock and it shall be open unto you. So, it's you have to take action in order to see results. So,
yeah, and seek and you shall find, right?
Right.
No, that's good though. We talked about that a couple shows ago. Like getting clear on what it is you want to do, right? From your perspective, you're going to listen to somebody that's very clear about what their goals are, what the end strategy is, right? And so you don't have to guess that. So for the people that are just getting started and don't have the experience that you have or that Mike has, it's really important to get solid about what it is you're doing, why you're doing it, what the plan is, who's going to execute, how much capital you're going to need. All those things come into play, because when you can articulate that, when you're on the phone with somebody or at a meeting, whether it's a Zoom meeting or meetup or whatever, then they're going to have more confidence in your ability to execute, because you know what you're talking about. You may not have done the deal yet, but at least you thought it out and you got it in your mind so that you can explain it to somebody. So somebody like George that has a ton of experience and has the ability to be a passive investor is going to take you a little bit more serious. Would you agree with that, George?
Yeah, no, absolutely. I'm gonna ask some tough questions to the team and to the lead, and they know what they're talking about, and I can see them performing, and I'm gonna trust them.
It's all about perspective. So George, what's your 3, 5, 10-year goals?
3 years, definitely want to be at 10,000 doors by then. 5 years, most likely probably have in-house property management, and continuing to grow. 3, 5, did you say 10? 10 year?
How old are your kids, George?
They're
mine are teenagers, so I'm just
5 and 7.
Yeah, mine are teenagers, so I'm just if you ask me, Mike, it'd be like, what's your plan to when your kids are 21? Because my whole life is going to change after that, right?
That's funny. No, I mean, that's exactly when I said 10, that's exactly what I was thinking. I'm like, how old are my kids going to be at that time? Like,
yeah, exactly. Right.
So, at that time, they're going to be hitting their teenage years. So I will probably be going insane with three teenage girls.
Oh my goodness. I have two and a boy to somewhat balance it out. So good luck with that.
Yeah. So I definitely want to have a really strong team where I am not needed every second of the day.
Yeah.
But yeah, I mean, my plan is to continue to build this and just have a massive portfolio, have good performing properties. Not every property to me is a quick flip either. I want to be able to hold some of these a little bit longer. Yeah.
So, one thing we didn't talk about was property management, and you mentioned it, that you'd like to have in-house property management. When I always have been an advocate for in-house property management. Do you sub all yours out? So you have third-party management?
So not all of them. There's some where I have my co-GP on the deal actually has in-house management, so it's not technically a third party. And then the other ones I have third party.
Okay.
So can I put you on the spot again, George?
Sure.
If you could tell our audience, for those that maybe are on the fence, they're thinking about getting into multifamily for whatever reason, what's the one thing that one piece of advice that you might give them, and for me, I would tell them, get started, right? Because it's usually the start that stops people. So, what would you just off the cuff, just off the top of your head, what's something you might share with people that are, they're leaning forward, they've been thinking about it, maybe they have a little bit of money, or maybe they don't, but they've just been thinking about it, but they haven't taken that step. What would you say to them?
Are we talking about passively or active?
Well, I guess either.
Yeah. Passively, I mean, the passive end, I would just say that you're losing money by not doing it. I mean, that's, unless you've got some other good tax strategies and deferring your taxes some other manner, and you somehow have not been affected with the craziness of the stock market, sure. But if not, then you need to look more into it and get serious about it. Start looking up some syndicators and start vetting them and make a move. And then as far as active, I think the biggest thing I've seen that stops people is kind of, you don't instantly make money with multifamily, right? It could be a struggle. It could be a good amount of time before you start bringing in money. So to say I'm going to quit my job and go do multifamily real estate, I probably wouldn't suggest that. But you do need to get started. Carve out that time you're going to spend doing multifamily, and then do it.
So education is helpful, right? So, you got to get that little bit of education in order to take that leap. Because in the education, there's power in the education, but the power becomes part of the execution. So that's where the power really comes from. So, it's just a matter of getting smarter at what you do and then moving forward. So.
Hey, if anybody wanted to get a hold of you, George, have we talked about that, Mike, or what do we?
No, go ahead. Yeah, I was just going to go there. It's like 10:44, so we're getting down to the end here. So.
If anybody wanted to get a hold of you, what's the best way for them to do that?
If they visit my website, Elevate CIG, so it stands for Commercial Investment Group, elevatecig.com. We are, that fly is still there. We're updating the website weekly. It's got a ton of content on there. And then, if they want to shoot me an email, they can shoot me an email. It's George or Jorge, Jorge at elevatecig.com. If they mention they watch this, I can send them over some free content, a bunch of checklists I have and other stuff.
That's great. And it's let me I put it in the chat. So it's www.elevate, C as in Charlie, I as in India, G as in golf.
Yep.
Okay, cool.
You got it.
Great. And then you're going to be, Mike, do you remember what day George is speaking at the event?
I do not offhand. I don't have the schedule in front of me, but here's the deal. If you're there all 3 days, you're going to see him. So.
Yeah. And so, and the reason Mike approached me and said, hey, listen, I want to do this event. I want to give back. I want to create a community. I want to bring people together to educate people that are interested in multifamily. So that was the whole genesis of the Multifamily Global Summit. And, I think it's going to be awesome. I'm going to listen to every speaker because I know even with my experience, I'm going to learn things from guys like you and from the people that are going to be there, because it's 20 speakers over 3 days. It's going to be 25 hours plus with content. It's really going to be a great event. And I'm not just saying that because I'm speaking there. I really do believe it.
It's a good lineup. I mean, speakers.
Yeah, there's some hitters that are speaking. So, and I have to say, not just some, but every one of the speakers is coming to the table with something different that somebody can learn from. And I know I'm speaking, and I'm want to listen to everybody else. And here's what's nice: as a VIP and part of the VIP package, you get all the recordings. So you're going to get like 25 hours, over 25 hours worth of material that you can listen to over and over or at your leisure. So it's definitely an event to be at. So.
And by the way, including you, George, we're going to record you. I hope you know that.
Yeah, I'll be more prepared for that.
There's our disclaimer right there. We're going to record you, George. So just
Check the bandwidth, George.
Yeah.
Any last thoughts or comments for the listeners, George?
I kind of always end it with this: is just make sure you focus. There's a lot of noise out there. If you really want to do multifamily, if you really think it's a path you want to go down, then focus on it. Don't get distracted with other things, and get educated, like you said, and take action, like Carl said.
Yeah,
great. Thank you, George. Really great to get to know you, and I look forward to getting to know you a little bit more. Mike, take us home.
Yeah, Carl, thanks for being here again this week. I appreciate it. Every Saturday you're here, and I can count on you, and that's good. So, hey, I just want to say thanks to all our listeners and everybody who was checked in today. George, for being here, I really appreciate it, and I know it was kind of short notice, but you were able to step right up, and I appreciate that. Have fun with your family this weekend. I hope you guys can enjoy some weather down there. And Carl, have a great weekend. Listen, thanks for being here. This has been the Multifamily Global Summit, who is the sponsor for Multifamily Unplugged, your Saturday morning raw, unscripted radio program. And we're out.
See you guys later.